Alrighty, guys. Welcome to Wednesday, January 15th. I almost said December there. January 15th, Wednesday, CPI Wednesday. So news this morning is going to be big news going to be the CPI number coming out. Yesterday we had a pretty interesting day. A roller coaster, if I had to say it myself. Nice moves up and down and nice trending rolls if you wish. So this morning, though, mortgage apps came out and a massive improvement. Mortgage application double digits up across the board. Can you believe that? And as far as I know, in the mortgage rates are not going down. So interesting. So that was a surprise number to the upside. We had a speaker at 8. Haven't seen a reaction based on that. CPI coming out at 8:30. Empire State Manufacturing as well at 8:30. We have a speaker at 10, oil report at 10:30, and well, then we have a treasury buyback announcement. We'll see if anything happens there. We also have a speaker at the two speakers at 11 coming up. So speakers at 10, 11, and then we have the CPI at 8:30. So I think the CPI is going to be the number to watch. Let's see if that comes in weaker than expected as well. That would be a welcome number. And I think market will probably react positively to it, weaker than expected inflation. The only caveat is really oil prices with a spiked lately and potentially could pull through some energy inflation or adjust these numbers, but that would be for another report next month, maybe following that. So at this point, let's see how that CPI comes out. So, but that's the news we have for this morning. Looking at the ES, diving into this. Hang on. And yes, diving into this thing. And yesterday's trading was one of those confusing trading days. It looked a bit of strength, a little weakness. It was back up kind of to the midpoint again. And we're pretty much trading in this range down here over this area. So the upper area being the 5900 to 5915s. And support being down here at the 5810 to 20s. And so far yesterday we were at the highs and at the lows almost, and not quite at the lows, but definitely trying. And I would say we net ended up on the upside. And so far the overnight has been holding out pretty darn good to the upside, and not showing us a too much craziness. I think I forgot to spit out that London session. There you go. London session. There we are. And as you can see, right now we are to the upside. Goldman Sachs came out with earnings, and it was a pretty good earnings as well. Tomorrow on Friday we get the bank earnings coming out earlier than I thought, but I thought it's going to come out on Friday. But I guess it's already started, the earnings reports. And Goldman Sachs came out, and it was actually a pretty darn good report. So I think the market is leaning in on that. That things that may be better than they think, or there may be a strong economy behind it. So at this point, I would still start off range bound, same as yesterday. Maybe looking for early strength to see if they can retest these the 5900 to 5915 or 20 areas up here in the upper areas. And that would be up here bouncing up against this upper area of resistance. So if both of these areas comes out, the 5920 comes out, I would be looking for maybe a move up here in this upper distribution, this upper range. Attractor being that starting point at 5950, but definitely I'm going to take off, look for or lean in on the long, not lean in, but I would say I would look to the long side of the market if they can take out that 20s, 5920s, and starts trading higher. That takes it up in that range. The first attractor would be up here at the 5950s, and then we'll see. Maybe they can make even an attempt to trade up here towards the 6000s. Remember, 6015 to 3035, that's where we find really good resistance again on the way up. But let's see if they can clear that the 5920s. Now, getting started in the morning with early, looking for early strength, if they take out the 20s, they certainly can run at a level higher or a little bit higher than that. I would be a little bit cautious about just stepping in front of it at the 20th. I would look for a better setup since we are range bound. So I'm looking for failure to take it out. And always you can get that fake out when they start running the stops above the obvious or try running it up to the next level up, just to get people sucked in on the wrong side of it. So just be mindful about that. But I think we had to get past the CPI first. If the CPI number turns into a big directional move, all of that kind of changes. So caveat first caveat, if the CPI results in a big directional move, we try to trade the direction or adjust the bias. If it's volatile but not directional, we go back and on the analysis and look for early strength and see if they can take out the 59.20s. And if they just rotate right back down again, as I said on the way down, if they take out the 59.10 to 20, or sorry, 58.10 to 20 on the way down here, that would be a big red flag on the way down. That could certainly set things off on the downside. So we'll see how it comes out. But I will start off primarily range bound, looking for early strength, and let's see if they can take out that 59.20s going into today's trading. If so, we're running up into this upper range above the 59.20s, and that becomes now support at that point. So that's how we get started. Let's see how the CPI rocks the boat, if it does, and if not, just go back range bound, look for that early strength. And then you're looking for early strength for a short setup, as you know. You're looking to get short for failure to take out that upper edge. And if you take it out, at that point, I would just stay on the long side if they take out that area of resistance. All right, in the bonds and Nasdaq, so the bond market backing off a little bit, a good sign. Wait for them to clear that 11.15 to 16. If that comes out, I think we may have a shot at retracing a little bit. As you can see on the capital flow when it comes to bonds, they've been a steady move to the downside. Attractor right now is like 11.30, a small attractor up here. So this area right there. So if they can clear that 11.15, 16s, we may have a shot at trading up to that 112 again. And that would be a welcome relief on yields going higher, back off the yields a bit. But yields are still pretty much to the upside. But anytime the bond market signals it's done selling off and it may start retracing a bit and yield starts coming back down a little bit, that would be a welcome sign for the stock market. I think the rally turns back, the rally is back on again if that happens. So on the bond market, looking to sell strength still up to that 11.15s, 15 to 16. Above that, I would the last one I would get short against is like 11.25. But at this point, if they take out the 15.16, I would start from the long side and see if they can trade it back up to that 26s, maybe even up to the 112. So I would start from the long side at that point and see how far they can take it. Just be mindful, don't buy into that 24 area or the 112 area. Obviously, that would be a bad bet. If you get early weakness though on the news, looking to buy against the 110 or 111s, 110.25s, 110.20s, all of them with a bit of caution. It's on the way down here. Yeah, on the way down here, if they're going to take out this area, there's just a little bit of caution to see if this is going to hold up or not. But looking to buy against that 11s, 111s, 110.24s, 110.20s for rotations back up. It's definitely worth looking at. The only caution comes from if they start trading back down again and they bias to the downside when the capital flow is still the dominating factor. So you don't want to get it run over. So just be a little bit cautious about stepping in front of it at those levels. Nasdaq, that's the one which could potentially set the stage. That's the one which has been rocking us back and forth as these big techs get sold and bought and rotated in and out of. You can see we are down here in this area, a little bit decent strength, I would say. They ran it down here to this attractor when that the last sell-off to the 20,800. So far, they held pretty good. They shot out, they tried a couple of times to take it lower, have not been able to. Doesn't mean they can't. So we'll see how that CPI number comes out and if that's going to rock the boat for us or not. But if they comes in volatile but not directional, I would start off range bound, looking to sell strength up to that 21 150 to 170. Looking to buy weakness down to the attractor point at the 20,800, maybe even down to that this ledge right there at the 670, 680s. We have a small volume attractor down here at the 630s, and that's where they're going to go next if they start trading below it. Starts trading below that at the 800s. I think they have a good shot at heading all the way down to the 30s. Still have to get through these two intermediate support areas though, but as you can see, these are kind of in the middle of stuff, and I don't think you really find a really good support until you get down to this area right there, this volume attractor, and then down here at the 480 to 500s. So those are the two areas which better hold, otherwise we could be in some big trouble. So Nasdaq starting off range bound, same as the ES, looking for early strength to see if they can take out this area. I would say it's the 150 to 170 are these upper areas. So if these three areas comes out, I think we have a good shot of getting back to that 230 to 40 and maybe even higher. On the Nasdaq though, I would not be super aggressive on the long side until I see them take out that volume edge up here, the 230 to 240 on the way up. It's just a little bit too volatile. I mean, on the ES, you had a little bit better defined, but this 240, this volume edge right there, if that comes out, I think we have a good case that we are trading back up in this upper distribution at that point. So a little bit less aggressive on the getting in on the long side on the Nasdaq, but there could be nice long trades on the way up. If they start to squeeze to the upside, you certainly want to be part of it. But in terms of the bigger picture, I would look for short setups against these areas of resistance all the way up here to that 240 level and see which one is going to hold. And there's no rush to get short against them. You can wait for a good setup. And as you saw yesterday, it was they churned in an area for like five attempts to take it higher before they finally failed. So that sets up a good. If you see stuff like that, one or two attempts to take it higher and it fails, yeah, that gives you enough to potentially try a short trade. And if they start taking it higher, you're just not out of that trade. So you can be pretty tight on your stop when when you trade against an upper edge like that. So range bound ES Nasdaq, both of them looking for early strength. Let's see how this CPI comes out and if that's going to mess things up for us. And then when it comes to oil and gold having a pretty good day. Look at that thing melting up. They took out resistance here at the 80s and 90s, and they are right up here again at the 2710s. So big move to the upside on gold. And that was an overnight trade, so that was interesting. But I mean, you can see they were down here, reverse retesting the 70s. Now they're on their way back up again. If they clear that upper edge, the 2720 to 21s, that's where they're heading right now to retest that edge. And if they get up that far and test it, I would be looking for a short setup against it for rotation back to that attractor at the 2670s. And if you take it out, I would lean in on the long side and look for a run up here to that 2750 to 55s. So low volume area is where we're entering. In the middle, we have a pretty good edge at 2720 to 21, and watch for that edge to come out. So if they take out that 20 to 22s, it's this area of resistance right here. If that comes out, and lean in on the long side because we are heading higher. All right, so that's gold. Let's see how far they can take it, but I would trade gold on the long side to get started. If this trade below that, the trade below the 90s, these two 93 and 90s, I would take off that long bias. But initially looking to buy against 98, 99, 94s, 90s for rotations back up, and below 90s, I'll taking off that long bias. So looking for long setups against 99s, 94s, 90s for rotations back up. And on the way up, not going to be very aggressive on the short side. I think the best short would be up here against the 20 to 22s. This upper area resistance, that's where you can find a good short trade. in between, I'm not going to be super aggressive on the short side. And oil, finally, oil is holding on to their 78s. So they back up. They haven't quite moved. And as I said, this is Biden outgoing policy messing things up, kind of dynamics that we're looking at. So we'll see how fast that can change after the starting next week. All right, but again, trade it on the long side. Watch that 77.40s. If that comes out, we can certainly trade back down into start retracing this to the downside. But I would still be looking to buying against the 77.80s, 77.30s for rotations back up again. So that's kind of the dynamic and all. One level below the obvious 77. And if you want to be less aggressive, wait for 77 to come out. But after that, lean in on the short side because if you're heading lower at that point. So, and I did not understand the oil trading higher part of it until it started coming out how these outgoing Biden officials are adding sanctions on Russia and stuff, which hurts in a way, which drives up oil prices. And obviously they didn't do that under their own watch because they didn't want to deal with the higher oil prices. So, but now who cares, right? Anyway, you can hear that that's something. It's a pet peeve of mine. Is that stuff like that ticks me off. Anyway, so oil traded on the long side of the market. Watch that 70 to 40s. These two support areas. If they come out, leaning on the short side. All right, so back to the ES, and we're kind of where we left it. Looks like they're stalling against this 5905s, and the Nasdaq stalling against the 21,000. So we got 8 minutes before news. So I'm gonna say good trading, guys. Gonna wrap it. Go get some coffee. Get ready, and then we'll see you guys back at 11:30 for the next update. Good trading, guys. See you later.